To talk more about the company, we're actually joined by the CEO of IndiGrid Trust, Mr. Harsha. Welcome to the show, Mr. Shah.
Thank you for having us.
Yes. Let me start off first, just for viewer, for more than knowledge. Could you maybe give some perspective to our viewers on what IndiGrid actually is, and the key metrics one needs to watch out for while analyzing the company, according to you?
So IndiGrid is a utility playing in energy transition space, largely focused on power transmission, renewable energy, and battery storage. So these are the focus areas for IndiGrid. In terms of the metrics, I think the core metric financially one should use is distribution yield and how distribution yield has grown over a period of time. For example, currently, as you mentioned, we are distributing 3.75 rupees a unit, which annually becomes 15 rupees a unit to our unit holders, which 5 years ago was 11 to 12 rupees a unit. So we have consistently grown that over a period of time. And I think globally, the key parameter to track any yield business is dividend yield plus growth. And that's what one should track InvIT on. So right now we are delivering 15 rupees a unit, plus we have grown it over past 6 to 7 years with 3 to 5% on a year-on-year basis. That remains the core metric. There are obviously other metrics of how many circuit kilometers of line or megawatts do we own. But I think financially, this is the most important metric for unit holders to track.
Mr. Shah, you've also recently done a fundraise, but before I move on to that, I want to understand from an investor perspective, from a viewer perspective, if they're investing in an IndiGrid InvIT, what are the kind of risks and returns that they can expect from IndiGrid InvIT?
Sure. I think IndiGrid, over a period of time, as I said, has delivered a very predictable distribution to unit holders, starting from 12 rupees a year to 15 rupees now. If somebody invested in IndiGrid, say 7 years ago when we listed, the CAGR return will be in the range of 12 to 13%, both in terms of delivery of distribution plus growth of price, both put together. Majority of IndiGrid returns have been delivered for distribution, which is predictable and growing. And the price change continues to happen because how we grow as well as interest rates. So I would say that unit holders should expect predictable distribution out of IndiGrid that IndiGrid has been delivering and growing as we see more opportunities in the market.
All right. And Mr. Shah, also in terms of regulations, what are the kind of things that one needs to keep in mind from an investor perspective when it comes to InvITs?
I think now with the recent budget changes on tax, it's pretty much at par with equity on taxation. It trades on equity indices. You can buy one IndiGrid unit. So over a period of last 5 years, the regulators and the ministry has worked very actively to make it a very, very easily accessible product to unit holders or investors. So just like you go to buy a share of a company on exchanges or on your broker, the same way you can go and buy a unit of IndiGrid. It is just trading on the equity exchanges. Its tax treatment is like that. So it's pretty much structured with that. The difference is that the InvITs, including IndiGrid, follow a fast, stringent regulatory framework prescribed by SEBI in comparison to equity-listed companies. So there are caps on leverage that we can do. There are mandatory distributions that we have to do. There are mandatory independent board memberships that's required. There is approvals required for unit holders for any related party transaction or higher leverage. So all of it is substantially regulated. So InvITs, I would put it as is at par with equity, but far more regulated, offering unit holders a well-regulated, safer investment avenue to invest in infrastructure assets.
Got it, Mr. Shah. Let's talk about your latest preferential issue, a fundraise of around 695 crores. Could you maybe give us a perspective on how this will be deployed and used for?
Before we go to the preference share, the way the preferential issue came about is KKR was looking at an offer for sale and that got oversubscribed by 2 times. And there was tremendous amount of interest that we looked at in our unit holders and subscription. And there was an overflowing demand. Also, strategic investors like Alberta Investment Management Corporation were also interested. And therefore, we decided to do a specific preferential issue to accommodate for strategic investors who could not participate in offer for sale. and raise 695 crores between largely Aimco and HDFC Life. The immediate use of this capital is going to be to repay some of the debt, and that is going to add to our acquisition headroom available for future growth assets. So the immediate impact is going to be repayment of certain debt, but it is creating further headroom for growth for IndiGrid in future.
Okay, and Mr. Shah, right now, from what I understand in terms of your asset portfolio, you have 18 operational transmission assets and 5 under construction transmission projects. So first of all, I want to understand that what is the kind of completion timeline for these 5 under construction projects? And secondly, are you looking for more assets to invest in? And if yes, what kind of segment would you want to invest in?
Sure. So for the 5 under construction projects, we are looking to complete them over next 12 to 24 months. The first project will get delivered in next 10 months and the last one probably in next 24 months. So that is the timeline that we are looking at for these 5 projects. We are looking to invest in more projects, especially in all the areas that we work in. So transmission, battery energy storage, including solar. So we are looking at these 3 segments, which are our core segments, to expand and grow in this area. And all of them are looking at tremendous amount of pipeline and capex that's being conducted by the country right now. So we are pretty confident that we'll be able to grow in these 3 areas.
Mr. Shah, and could we get more, deeper look in terms of what your bidding pipeline is currently looking like, and also in terms of the growth opportunity in leasing models, what is your perspective on the same?
So we are looking at identified bidding pipeline of almost 96,000 crores in just interstate transmission assets and battery storage projects. So we would be looking for that. I think the solar pipeline is much bigger and parallel, but also there are more players over there. So we're looking at, I would say, over 1 lakh crore pipeline, and we would be hopefully successful in getting 5-10% of that to grow IndiGrid. In terms of the leasing model, we do not do a commercial leasing as a business, so I'm not sure whether that's a relevant one.
Okay, and Mr. Shah, from what I understand is distribution per unit guidance continues to be at rupees 15 for FY25 right now. I want to understand usually, and for Q2 distribution is expected to be made in November 24. So firstly, I want to understand that what is the cycle like, and from a longer term perspective, this 15 rupees number, where do you expect it to go, let's say in the next 5 years?
Interesting question. So we do a cycle which is quarterly cycle. So we distribute DPU quarterly, which is 3.75 a quarter. That's the guidance for this year, and which will take us to 15 rupees. In terms of the forecast, we typically look at the forecast when we acquire more assets and grow the distributable cash flow, which allows us to grow DPU. So if you look at our historical track record, we have grown in the range of 3 to 5% year on year over last 5 to 7 years. We would like to continue the same trajectory for next 5 years, which means that the 15 rupees, if one grows 3 to 5% year on year for next 5 years, probably mathematically it will reach in the range of 17 to 18 rupees a unit. We don't know, but that depends on the growth that we see in the market. So we are confident that there is enough opportunities for us to capitalize and work on. So we're hopeful that we'll be able to continue the growth trajectory. In addition to that, we are impacted by interest rates, and I think we're hopeful that as the interest rate reduces over the next 2 to 3 years, we also see gains coming from that on our NDCF as well as general value creation.
All right. And Mr. Shah, you mentioned that the preferential issue that you've made, you will use that to reduce your debt. Now, in terms of balance sheet, you have roughly 20,000 odd crores in terms of gross debt and cash balance of roughly 2,500. So, roughly say 17,500 net debt sitting in your balance sheet, and you'll use the entire preferential issue for reducing your debt. But from a longer term perspective, I want to understand that in terms of debt reduction, what are your plans?
So see, we own infrastructure assets, so there are very limited, I would say, chances of we becoming a debt-free company. Our goal is to maintain an optimal leverage, which is important for any infrastructure player. Not too high, not too low. So that number for us is in the range of 60 to 70% of our asset value. 70% is a cap provided by SEBI that one cannot grow beyond. We are currently at 61%, and probably after this, preferential issue will come to in the range of 60% net debt to AUM, which is the bottom part of our optimal capital structure where we want to be. However, as we acquire more assets, we'll grow the leverage. So I would say guidance-wise, leverage for this entity will remain 60 to 70% of its asset value, which is, I would say, the most optimum from tax, from leveraging returns for unit holders, and for compliance for SEBI regulations and maintaining our rating. So we are in the range of 60 to 70% of our asset value. That's where we want to be.
All right. Well, Mr. Shah, thank you so much for giving us those answers so comprehensively. I think that makes my understanding as well as the viewers' understandings in terms of InvIT much better. So thank you so much for that, and thank you so much for taking out time and speaking with us at NDTV Profit.